Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He's been on, I think, for at least 5 years now. Every year he writes a detailed year in review. It's published on Chris Martinson's website with Adam Taggart as business partner, Peak Prosperity, and also on Zero Hedge. I think he's formally written his year in review now for about 10 years now. David B. Collum is the Betty R. Miller Professor of Chemistry and Chemical Biology at Cornell University. He is also an astute follower of the markets and value investing. So, David, thank you for coming back and joining me.
Yeah, it's always fun. I remember the last one we got into it pretty good too, so this should be entertaining.
Yeah, I mean, your year in review is so comprehensive, so it's tough to cover a lot of the different topics in 50 minutes or an hour. So if our listeners really want more insights, I recommend going and actually sitting down and reading it and going through the chapters. But let's talk about 2018. So 2018, for a good amount of the year, David, it seemed to me that the stock market just went higher. It was kind of, throwing off a lot. Any bad news, the stock market, especially the FANG stocks, the Facebooks, the Amazons, the Apples, the Netflix, the Googles, the Nvidias, were just throwing off those bad news. Also Tesla, they're throwing off those bad news. We did have like a hiccup in February where the VIX spiked, but then, the stock market kind of shrugged that off too, although the leveraged short volatility trade almost blew up and the triple leverage VIX ETFs had shut down. But then in August, things started to change. So how would you describe then the setup to 2018? And since you've been around in markets longer than me, does this remind you of what happened last year, any other years?
Let's say hypothetically this is the beginning of something serious, then yeah, it has a sort of an 06, 07 feel. Interestingly, the cracks in the market in 07, I stood up in front of my class in about March of 07. I was lecturing about chemistry, but I have kind of a totally disconnected approach to lecturing, and I all of a sudden blurted out to him that I thought the banking system was about to break down. And I even said, you could go to an ATM and not be able to get money out of your account. And that's what it has, that feel to it. I love metaphors. It feels like sort of a teenage driver on black ice fishtailing around. And so a market that's net break even but going up and down 700 points at a time is not a healthy situation. It's out of control, and so maybe it's going to break. I don't know. I'm not afraid of crashes or anything like that. Those are, in my opinion, historically minor events. But if it really grinds down over the next handful of years, and really if it parks down there, then we've got a real problem.
And you mentioned in previous interviews that you had cash set on the side. So if there is a crash, you have cash for opportunities, right?
Yeah, about 60 to 65% cash. Laddered treasuries, 2 year, laddered 2 years. So it's so short duration that and even a V bounce, it gives you plenty of opportunity to adjust. So, yeah.
So do you think then this extra volatility, and Mohamed El-Erian said that we could have like 1,000 point swings up and down in the Dow every day going forward, which would be just mind-rackingly frustrating and insane for most retail investors. Now, if you're a professional and you can go short and you can go long and you can do options trades, this is not that big a deal for you. But if you're a long-only investor like a mutual fund manager or a retail investor who only makes capital gains on the long side, that has to be frustrating. But my question to you is, do you think that the technology, these high-frequency trading algorithms are causing most of this, or do you think like it's a combination of that plus maybe the intervention and rules changes by these governments and central banks?
I'll actually add choice 3. The algorithms certainly produce a kind of a spikiness, I think, to the movements, because once a trend starts, they tend to chase it further. But I actually think it's now finally sort of longs and shorts battling it out for price discovery. I don't agree with Mohamed El-Erian that it can keep flopping back and forth 1,000 points at a time. I mean, that's like playing Russian roulette and saying you can keep playing it over and over. There's a gambler's ruin part there. And at some point, each one of those swings is at risk of breaking the market. And I think at some point investors will say, look, this is too rich for me. I'm getting out. I just noticed, by the way, that that I'm not a technical guy at all. In fact, I spoof it on Twitter. But I did notice that the 200-day average had dropped below the 50-day average. Is that right? Is that how it goes? Yeah. Or the 50-day average had dropped below the 200-day average. Yeah, that shows you how TNA I am. But that's considered something like a death cross, and that happens rarely. They say it happens at the big turns, and so to the extent you believe that stuff, then it seems to be foreshadowing. At some point, it's got to go. So the key thing here is valuations are so high; they're a round number, a factor of two, too high, and so. As they say, high valuations don't mean that your bad returns are imminent, but they are inevitable. And so I'm praying it's fast. I want it fast because I don't want to sit around 10 years waiting for the paint to dry.
Well, I think smart money, and we've seen this in the data, that a lot of professional money managers on stock rallies, and this started in January, and it accelerated when the January 2018, and it accelerated when the VIX spiked in February 2018. But basically, a lot of smart professional money managers have been fading the rallies. So every single time there's a major stock market rally, they've been lightening their positions off.
But I think they're jumping back in. So I don't think we came out of February with big money running for the sidelines. I mean, I think they started to run for the sidelines, and they just can't contain themselves. And so once it starts going up again, they've got to chase it. It's like a Labrador chasing a tennis ball, right? And so it the fact that it rallied back and kept going again, and I thought, oh my God, this isn't happening again, is it? But at some point it gives out, and it just gives out like a stack of blocks. It's too tall. Eventually topples. It takes just the wrong vibration and the wrong event, some gray swan, something that triggers it. And I mean, we have monstrous issues. I think the U.S. economy has been limping along pathetically despite what CNBC says. And China is about to go through a deleveraging. And as someone said, a communist bloc country is this large has never deleveraged. And I said, no country this large has ever delevered. And so if China has a crisis and they have a massively levered banking system, there's no way that doesn't wreak havoc. Put it this way, if it doesn't wreak havoc, I'm just getting out of the game completely. I'm just going to turn off my computer screen.
Yeah, I disagree. I agree with your assessment there of China. I could add a lot more points. I've actually been researching a lot of the things going on in China. But right now, the problems that you mentioned with the U.S., the budget deficits are blowing out. There's a lot of the U.S. economy is definitely slowing down. The U.S. is kind of being given a pass, though, at least for now, because Europe is being looked at as the worst problem. So on a relative basis, you have maybe managed money that was in Europe, that was in emerging markets, maybe it was in China, and it's coming here to the U.S. still, maybe in treasuries, and that's why yields have not spiked yet. But, I think Europe, in the short term, Europe is the biggest problems with the European banks, with the European government debt, and social unrest there.
Yeah, right. But that's kind of a global version of a market narrowing, right? So when there's fewer and fewer market leaders, which normally you're talking about equities, but if you're talking about regions of the globe, if you're the prettiest horse in the glue factory, you're still in the glue factory, and I just don't think that wins in the long run, And again, with the valuations at nosebleed level, your best case scenario, let's say if we're 2x overvalued, it means you're going to make half the returns. And if the best case scenario is we don't move from here, and so then you chug along. And it turns out most investors don't know this, but over the long haul, if you throw in everything, if you throw in sort of nominal returns on equities, and then you throw in dividends, and you take out inflation, and you take out fees, and you take out taxes, you make about 3.5% a year. If you now superimpose upon that valuations, you realize that you're in a world of pain.
Yeah, 3.5% per year. Most people would not be happy with that. So,
but that is the number. That is after everything, all the frictional costs that no one ever includes in their analyses. 3.5% over 150 years.
Well, David, if you want to include a real inflation rate, it's probably less than that. But I mean, I know you in the past you've talked about the underfunded pension fund plans, and so the pension funds, they have massive amounts of capital, hundreds of billions of dollars, some of them to invest, and yet they're only getting 1% or 2%. So they're not even getting the 3% you said.
And because of that, they're going after stupid stuff. So, for example, the state of Kentucky, which you know as well as I do, is essentially completely and utterly insolvent, their pension fund. There is not a single, there 1 in 1,000 probability that they will be able to grow their way out of their pension deficit. They're 20% funded. But what's also true is in an effort to reach for yield, they went in something like 2003 of having 3% junk bonds, right, which is a reach for yield, but it's only 3%. They're at 55% junk bonds now. As soon as we have a credit crisis, they're all going to hell. And so the state of Kentucky's pension plan is going to go from 20% underfunded to who knows how low underfunded. So all these pension funds that are underfunded, on average, I think across the nation, they're about 70% funded. And this is at the top of a wild, wild run in equities, which was unsupported by the GDP growth, which was about 2% a year. And so this has to regress back in a serious way. And they're still 30% underfunded. So what's going to happen when that regression occurs? What's going to happen to those pensions? They're going to be down to 50, 40, 30% underfunded on average. And
David,
I don't see a way out.
I agree. Do you think any of these politicians are actually going to go on TV or on the radio or in public and actually tell the people that voted for them that they made promises to, actually tell them the truth that they're not going to get the pensions and the retirement and the health care that they were promised?
Well, there's a couple of places in society where that's already been told to them, and there's places where deals have been cut where pensioners are getting 20 cents on the dollar now that they signed off on it because they realized it was that or nothing. But it's small enough that no one's hearing the noise. But if it happens in earnest, there's other avenues out. The Fed could turn on the printing press. I think the most logical solution to me would be that the Feds loan money to the states, knowing full well the states will never pay them back. That's what I think is the most logical outcome. Now, what does that mean? Well, it means that they're going to destroy us at some point with even greater deficits, which are now running 6 or 7%. Right, 6 or 7% with the current 2% growth in the economy. Now this year there's some 3% prints. Those are one-off fictional, in my opinion. So we've been for 10 years been a little over 2%. You can't be growing your deficit at 6 to 7 with your economy growing at 2% without us eventually blowing up, just completely going Japan. You say, well, Japan has blown up. I read somewhere, and I wish I could find the link. I've got the info, but not the link, that if Japan let its rates go to 1%, its entire tax revenues would go to be paying off the interest payments on their debt. 1%. That's why they keep stepping on their rates down to 0.1%. They can't afford a 1% sovereign debt.
Their central bank is trapped.
They're totally trapped. So someone's got to get stiff. This is a classic case. It's like you're in Donner Pass. You go, look, we don't have any food now.
Well,
and you can say, well, we got to do something. I go, you're going to die, right? That's what you're going to do. You're going to die. And then some of us are going to eat you. But that's it. It's a Donner Pass model.
Well, I call it basically stagflate and lie. So there's the people there, the currency is going to be devalued. There's going to be probably more taxes layered on, like, the pension, the solution, and I'm using air quotes, that the state of California is doing now for CalPERS and CalFERS, which have enormous sums of money to invest, and they need 8% compounded annual returns, and they're only getting 1%. But their short-term solution, I'm using air quotes, is just to layer taxes onto the tourists. So California is running all these commercials.
They need more than
California
8%.
does?
Yeah, they need 8% to be 70%.
Oh, they would kill
70% funded.
They would kill for 8%.
Right. They're not going to.
They're not going to get anywhere near 8%.
It's not a chance they're going to get 8% going forward because the valuations are too high. The bond funds are the valuations are too high. Equity funds, and so you're right. They're trying to tax, but people don't have the money. And they're getting mad, and politicians will say, well, I don't want to piss everyone off, so I'm not going to tax them. And so what do? You just wait until something really, really bad happens. And then you say, oh, we couldn't do anything about it. Sorry, you lose. We start all over, big reset. That's some kind of reset. I don't know what it looks like. My brain won't let me think. It's like if someone said you have stage 4 cancer, and you could say you're going to die, and you go, I'm having trouble with that part. But it is going to happen.
To add to your points there, David, most people's incomes are not rising, especially if you're like middle class in the U.S. or you're working class in the U.S. Most people's income are not rising, and then all of a sudden, maybe you, hypothetical, you live in the state of Illinois, and all of a sudden they're trying to increase your property taxes by another $5,000 to $8,000 per year. Well, your income didn't rise, so how are you going to pay the property taxes? And that's why you have a lot of people for the last couple of years who want to get out of Illinois and move to states where they don't have that type of taxation.
Right. Illinois is number 1 in the country for taxes. And then you end up in the death spiral. And Illinois is also, and Chicago in particular, also are thinking of tricks like borrowing money to invest in equities. Oh, that'll work well. Yeah, tell us how that works. Just double down. Let it all ride. Do it. Go to the slot machines and hope to win it back. That's just stupid.
Illinois is a total mess. I agree with you. They have, I think, in the Chicago area now, there's a 9% entertainment tax for video game players. So they're having the internet companies report internet usage, and if your internet usage is too high, they have proof that you're playing too many video games, you can be taxed an extra 9% per year.
But don't be surprised if this spreads, right? Right now it's Illinois.
Well,
what do you do if how do you avoid this? How do you escape this if they just start beating us senseless with taxes? It's not obvious to me how
you can't fully escape this. You can't fully escape this because the average person doesn't have money to go and get second and third passports and move all their assets to different countries in a short amount of time. It's just not possible. But what you're going to see is people from California moving to Nevada, moving to Texas, moving to Colorado, these states that are moving to Arizona, states that are historically less taxes. But, as more and more Californians move to those states, over the next 10, 20 years, they're going to ruin those states too.
Right. They're chasing Jell-O around the plate. It's just, I think we have a global debt problem. And you say, well, how can you have a global debt problem? For every creditor, there's a borrower, and so it doesn't come out in the wash. The answer is no, and the reason it's no is because a global debt problem is when globally people have been promised a higher quality of living than we can produce globally, right? So if everyone thinks we're going to live the American dream and the resources don't exist to do that, you got a global debt problem.
Well, we have Ray Dalio talking about how the global economy and the banking system had a beautiful deleveraging, but like you said, I don't see any evidence that there was any deleveraging anywhere really in the global economy.
Dalio is great at making money, and he might be a great trader. I don't know how he makes his money. I'm unimpressed by his macro. He puts on these slick little videos, and they just sound stupid to me. So maybe he's smarter than he looks, but I think he's faking. He wants to look like a thinker, but I don't think he is. Not in that camp. And it's not that I am either, but I can poke holes in it. I'm smart enough to see the flaws in his thinking. That beautiful deleveraging was a load of crap.
Yeah, I totally agree. And he actually admitted in his book he got private meetings with all the central bankers like Mario Draghi, Ben Bernanke, Janet Yellen, and he got to influence policy decisions to help him make money with his trade. So I think that's the beautiful deleveraging was, the spin job to tell the central bankers so he can make more money on his stock trades, not reality.
Yeah, that's what Buffett does too.
right? So if one followed the letter of the law, the Dalios, the Grosses, the Buffetts of the world would be in prison because they insider traded, especially during the crisis. There's a paper written in '94 by Paul Romer, who just won the Nobel Prize, which he talks about how the banks' business model, their profit model, is based on crises. So they make money going up, and then the crisis appears, and during the chaos of the crisis, whether it's the peso crisis or the savings and loan crisis or the great recession crisis, they scoop up huge gobs of money while nobody's looking because there's so much panic and so much money flopping around the system. And that's built into their business model to make money on the way down too. And so it's kind of this disgusting thing.
If I could add to your point, David, it's also built into their business model to manipulate a market. So they do a cost-benefit analysis, right? And like one guy goes to prison, the bank pays a fine that's not even 10% of their profits. I think HSBC, the newest bank fine was HSBC settled criminal charges or a lawsuit for $30 million when they made billions of dollars in profits rigging bond market.
Yeah, and like Wells Fargo, cheating 4 or 5 million customers. Those guys should be getting auctioned off on the courthouse steps. That bank should be completely vaporized. But instead, I think they got maybe they got a couple of billion fine on that. But these are just taxes. These are just business costs for them. And no one goes to prison, and that's why people are starting to burn cars and stuff like that. That's what happens because some guy sitting in a double wide in the middle of some remote place can be tuning into the internet and reading about how unfair the world is. People don't worry about whether they're rich or poor as much as whether the system is fair. When it reaches some threshold of unfairness and progressivism kicks in, and it's never constructive, right? It's understandable. But, when some guy lights a car on fire in the middle of Paris and you're pissed off, you don't even know the guy. You don't even know what he's pissed off at. But you're pissed off because you're not getting paid enough and your wife's at home bitching at you. And you go, I could do that, and you light another car on fire. So there's this one common denominator, this one collective agreement, and that is we're all pissed off.
You also have the American
trouble.
Everyone is pissed off. Well, except for the people at the top who are making lots of money. But yeah, most people are not getting those wage increases, the bonuses. They're not getting their wages increase every single year. So, but in France, I think they're even talking about organizing a bank run. I think I heard that. But the problem is with the modern banking system and fractional reserve banking and how basically a large bank can make a phone call or an email to the central bank and they could get their reserves replenished. So I'm not sure if intentionally doing a bank run and withdrawing all your cash in France from a French bank is actually going to do much of anything.
Yeah, but it's the psychology of it, right? So what caused Arab Spring? What triggered Arab Spring? One pissed off Tunisian guy lit himself on fire. He was the spark. So when you have a metastable system, it can take the most minute vibration to start something. And if you stack blocks in your kid's room and made it stack 6 feet tall, you'd notice the higher it got, the more sort of sensitive it got. And then at some point someone would slam a door downstairs and the thing would topple. And I did, here's one for you. I did this example of a metastable system the other day, and I'm going to videotape it and show it. I had a little serving bowl, and the water was running into the serving bowl down one side, and it would shoot out the other, and the bowl would never fill, right? It's like running a faucet onto a spoon, right? And it would run through, and the force of the water would keep cleaning out the bottom of the bowl. And I'm watching this thing thinking, that bowl wants to be full. And then after going for about 20 seconds, it just all of a sudden filled up. I could not discern. So I did the experiment over and over in different amounts of time. But there was some moment, some splash, some droplet that went in the wrong direction, and then the bowl filled, and then it no longer, sloshed out the other side and cleaned out the bowl. It became a full bowl of water, just collecting water. And that's a metastable system. It is not thermodynamically stable, but it hasn't yet found the right configuration to change. When it finds it, it's fast. The VIX was a great example, right? When the VIX when the VIX spiked, and the VIX shorts, who thought they could never lose, they found that after a bad day, a 10 or 15% drop in the VIX short funds, a 10 or 15% spike in the VIX, 45 minutes after the market closed, the entire trade blew up. In 15 minutes, the entire multi-billion-dollar, possibly trillion-dollar VIX trade completely, utterly blew up to the point that by morning, those accounts didn't exist. That's what can happen.
But what about the rules changes? So if, because during 2008, I have friends who are hedge fund managers, and they had winning short trades on. They were shorting banks. They were shorting home building construction companies. And I think the broker-dealer, if they cleared their trades through like Goldman Sachs and others, and if they were outright shorting the stocks and they would have stand to make many, many millions of dollars, the rules were changed on them, and their trades were closed, and they didn't get to profit their winning trades.
That's exactly. So I watched that play out. So I was one of thousands who knew it was coming, saw it coming. I wrote about it in 2002, way too early, doesn't matter. And what struck me the whole way is that counterparty risk would kill these bets. And that is that if it really collapsed the way I thought it was going to, they wouldn't get paid. And so you can short CDSs all you want, but when it comes time for someone to pay you, they say, we don't have it. You're done. So the only reason that the Kyle Basses and the John Paulsons got rich was because we bailed out the system, because we had to pay them to make sure the system didn't blow up. And so they gave, the only reason AIG went south is because the Fed stole AIG. AIG was never at risk of insolvency. They weren't even close. The reason was because AIG had legal constraints that totally cordoned off the AIG insurance company from the derivatives group. So the small derivatives group was whoppingly leveraged, but ring-fenced. But the problem is the people who were going to get crushed were politically connected and powerful, and so they literally took all of AIG. They took it. And that's what the lawsuit by Hank Greenberg was about. He said, you stole my company.
That's interesting. I didn't know the details to all that. I thought another big part to that story was also because Goldman Sachs, the company, didn't want to cut their dividend.
Well, but it's not just the dividend. Goldman would have been insolvent. And so the only way to keep Goldman solvent was by taking AIG as though the whole company was the problem, and they weren't. It would be like if your kids were adults and they went on a spending binge. The courts can't get to you. But the court said, but because there's important players here, we're going to take your assets too because we need them. And that's what they did. They took AIG. And they bailed out AIG to the tune of $187 billion as a whole company, whereas the huge percentage of AIG was never responsible for paying out those credit default swap payments.
So do you think we're headed down that road again? Do you think it's going to start in Europe?
I could start in Europe, could start in China, could start here. There's a number of candidates now, right? Could be some butterfly flapping its wings in Madagascar, right? I don't know. The start part is irrelevant. The question is how levered is the system, and I think it's massively levered. And
yeah,
they'll say
I totally agree.
The shadow banking system is filled with leverage, and the fact that equities and bonds are way off their normal prices, way off, that when this regresses to the historical means and through the historical means, and then you got collapsing pension, you get this massive cascading failure.
And the leverage short volatility trade would, in that scenario, would blow up, and so would Ray Dalio's risk parity trade, which is stocks and bonds don't go down at the same time.
I think he's out of it. So that's so just to back off a little in case some listeners don't know this, Ray Dalio had this idea that you lever up bonds to get them to be as risky and as profitable as equities. It's called the risk parity trade, meaning you have parity of the risk between equities and bonds, which told me you lever up to do that, you're going to blow up at some point. And so they started hiking interest rates, right? So the risk parity trade was doomed. And then I read that Dalio had already seen it coming and gotten out. So his risk parity trade had been adopted by many, but he was gone. So he was P.T. Barnum. Now, the other thing that you want to be watching is Powell. So Powell's acting schizophrenic. He, in 4 months, went from hawkish to dovish to hawkish to dovish. And he what was it, about a week ago, he found himself on stage with Yellen and Bernanke. And he's babbling about supporting the equity market. So this is pathetic, right? We're not, 200-300% gain off of the 2009 bottom. And now we're down 16%, and the head of the FOMC is talking about protecting asset markets. 16%? So he either knows that it's that bad, or he's just a complete and utter spineless wimp. And I don't know which it is. He could be trying to talk people off the ledge while having every intention of doing exactly what he knows should be done. So it could be don't follow what he says, follow what he does. And we'll find out soon enough, because he's going to hike.
Yeah, I saw on Twitter yesterday you were really calling him out. Over the weekend, Danielle DiMartino Booth, who had been a big defender of Jerome Powell, basically called him the reincarnation of Paul Volcker, and she turned on him really badly over the weekend on Twitter as well.
Danielle and I shared so many direct messages after that thing on stage with Bernanke and Yellen. She was despondent. And what's really his big screw up, in my opinion, is he never should have found himself on stage with those other two. An active Fed chair shouldn't be in such a risky situation. He shouldn't be in a situation where he can mutter something really stupid and cause troubles. Well, in that case, he muttered defense of the markets, and so it went on this rampage up, and it squeezed out all the shorts. Those guys will be back. But then, now and I even heard rumor that the other Fed governors were pissed at him. Now, next time he's going to be more careful. Unless that was orchestrated, he's going to be more careful. And he might even have to prove he's hawkish, so that might have forced him back into a hawkish stance. But the bottom line is the Fed doesn't have control anymore. It's like they're the kids driving the race car, like grocery cart in the store, right? The aisle they go down has nothing to do with what they do. They've totally lost control. And now, if Powell also looks like a wimpy Fed chair and an erratic Fed chair, that'll accelerate things, in my opinion. But he can't save anything.
Yeah, it sounds like the Fed has basically a broken roadmap, because he was hiking rates, but the system is so leveraged. I mean, no lessons were learned during and after the 2008 financial crisis about too much debt. In fact, there was a lot more debt that has increased since then. And basically, because the system is so leveraged, there's so many credit bubbles, so many asset bubbles with leverage, that eventually at a certain point, and I don't know the exact point, I'm not sure if anyone does, that if they keep raising interest rates, something will eventually break, and then it basically becomes a domino or chain reaction.
Yeah, but see, that's what the Fed does, though. The Fed keeps raising rates until someone gets their head blown off. And if they raise rates and nothing bad happens, then that says, okay, raise them again. So it's kind of like the Peter principle of monetary policy. You will keep raising. You'll keep raising until there's a disaster. And then the question is, can you stop? And the answer is no. Once the thing starts rolling, then it's out of everybody's control. And if it starts rolling with, treasuries 10 years sitting at 2.8%. By the way, in the last collapse in 2008 and 2009, the cost to investors of equities getting pounded was in a 60-40 portfolio was offset a lot by the fact that the bond prices went up. So your bond portfolio was amazing in 08, 09. And the problem is they've now squeezed the juice out of that orange. So now there's nothing left there. You can't make a bond portfolio, be profitable off of these rates. So now it's a bufferless collapse of equities. And imagine this. Imagine that if the trigger is a spike of interest rates. Who knows why, right? It's a chaotic system. If the trigger's a spiking interest rates, what it effectively is a collapse of the bond market and the stock market simultaneously. What kind of a mess is that going to create?
I would speculate then that the powers that be will try to change the rules because they want to protect the system and the status quo, and they don't want to make.
What's the rule you change, though? What rule do you change? I mean, that's like saying you have stage 4 cancer. You say, well, we're just going to change the definition of stage 4, right? I mean, it's just,
well, the banks are still. I believe the banks are still bankrupt because they're not marketing their assets to market, right? So we have since March of 2009, we have mark-to-market accounting for the banks suspended. If any other corporation in any other industry does that, they would go to prison for accounting fraud.
Right. So the FASB Rule 157 got negated. I actually think it was the trigger of the 08-09 crisis when when the mark-to-market accounting rule kicked in. I think that was actually what triggered the 08-09 crisis. And so they then quickly undid it and basically said you can now pretend like your assets are worth anything you want, and therefore you're not insolvent because you get to pretend you're solvent. But what are we going to do next time? I don't know.
That's above my pay grade.
Out of this without pain and suffering and Yellen could have done some stuff. She could have mitigated it, but then it would have just spread the pain and suffering over time. It wouldn't. I don't think it would decrease it. Although you can do so much damage that you say that was unnecessary amounts of damage you just did, right?
I've learned over the last 10 years that the people in power are really, really good at kicking the can down the road.
Yeah, but that eventually stops. That's a Herb Stein model, right? It's got to stop. If it can't go on forever, it stops. And when? I don't know. You don't know. Year after year, we say we don't know. But, again, deficits soaring, leverage soaring. Sheila Bair came out this morning, and it really caused me to go into an incredible debate where she said that the banks should have been recapitalizing. And that generates an allergic reaction in my mind because I'm thinking, okay, well, first of all, one of the ways they recapitalize is to get free handouts from the Fed. But I don't think that's what she was saying. And so what I think she was saying is, look, you got to dial back your loans. You got to cut your leverage ratio back. And I said, and therefore you will restrict credit. And we know that if you restrict credit, we'll go into a deep recession. And I'm okay with that because I think that's on the horizon anyways. But people are saying, no, you don't have to restrict credit to recapitalize. I'm going, well, where's the money come from to recapitalize, if not cutting back on the number of loans you have out there? And someone will say, well, you sell your loans. I go, from what bank does the person take the money that buys the tranche of loans? And I went back and forth with a couple dozen people today, and they kept saying, well, someone will just buy them. And I go, they're taking the money from a bank. You can't deleverage a bank by buying something from someone else who takes money out of the bank. It's to the penny a zero-sum game. So the only way you recapitalize is to delever, and that's a credit contraction.
And I think recessions are healthy. Especially if
unless you restrict them, right? It's like vomiting is healthy, but if you find a way, it's like Montezuma's revenge, right? You get sick. One of your choices is to take Imodium. The other choice is to not take it, so your system does what it's supposed to do, and then maybe take it. That's kind of a Greenspan model, actually. I've never thought about that. But Talev talks about this. He says, here's an interesting one. He says, we're told to ice ankle sprains to get the swelling down. And he asks, is it possible that Mother Nature wants it to swell? Right? We're always trying to mitigate a consequence that's a healthy consequence. And so that's part of his anti-fragile model. And as painful as the book can be in places, I think the concepts are important. So the Fed has got an allergic reaction now to recessions. And as a consequence, it's like having too much brush in California, right? You have fires that go get bananas. When it finally hits, it becomes a bloodbath. It becomes carnage. It scorched earth.
Yeah, and I think this goes back to Keynesian economics, because when Keynes wrote, the general theory and the stuff he was talking about and writing about afterwards, he was basically saying, I've developed a way to stop the business cycle. And
then in his old age, he recanted. In his old age, he recanted, and he said, I overestimated the control we have over it. I don't remember.
Well, he might have, but all his disciples and all these economics textbooks and all these economics professors, they stop listening to him because, he's kind of like that Democrat that takes the red pill that's not a Democrat anymore.
Well, they're also like environmentalists, in the sense that economists and environmentalists and ecologists, their job was to watch and understand, right? It was kind of an intellectual pursuit. And then they developed this attitude that, no, their job is to control it. So we have a wetland at the top of the lake, and it's this national preserve. And some nitwit decided that it was too congested with who knows what kind of species. So they did this remediation, and they destroyed it. And it was because some idiot thought he was smarter than Mother Nature. And the idiots at the Fed think that they're smarter than the free markets at setting the price of capital. And they think that, if the system's trying to go into deflation, and they decide, no, we can't have deflation. It's like, what makes you think that when the system's screaming deflation, that it's not what's needed? Why do you think that's the wrong thing? And I don't think they have a good answer for that. Well, we don't like it. And I go, yeah, that's back to the vomiting model, right? If you got to throw, if you got to hurl, it's time to hurl.
Inflation is good for governments and politicians, though, especially when there's a lot of debt and they can pay back, these unfunded liabilities in cheaper dollars. They can move the asset prices higher, nominal value, collect those capital gains taxes. So there's a I would say that especially in the U.S., but there's a very pro-inflationary bias in the U.S., and it's very anti-deflationary because of what happened in 1929.
Well, it's also true, you hit on it in the earlier sentence, they can tax inflation, they can't tax deflation. When you have a deflation, if your assets are going down slowly and you're actually making progress because your purchasing power is going up proportionately, then that's great. That's fine for us, but they don't have a tax revenue. So they love nominal gains. They like the fake ones. If your money doubles due to just inflation and you pay taxes on that, you just lost. You lost money. They made money. And so the inflation of assets is a revenue scavenge.
Yeah, I totally agree. Plus, inflation itself is a tax. Keynes called it, I think, the stealth tax. That not one man in a million can recognize inflation as a tax.
Right. Actually, I think more can now because we've got the internet. We're now all learning at breathtaking speeds. So I think in some sense they're having trouble throwing fastballs past us. And they're also arrogant, right? Why do they think they have control?
Because they have a PhD in economics, so that makes them think that they know everything?
Yeah, that makes me think they don't.
Well, you're surrounded by more PhDs than I am, so you can answer that question better.
3,000 of them over here.
3,000 of them over there, and I bet they're overconfident and cocky and have hubris.
Yeah, I probably do too, but yeah, us academics are pretty confident in our skills sometimes.
Yeah, Talev has a great book called Skin in the Game, where he bashes academics and stuff and proves like their track record's wrong. So
a little
I recommend our
hypocritical
listeners,
though, because he himself is a little hypocritical because he himself is an intellectual, right? So he
only after he made a bunch of money trading on Wall Street, though, right? So
yeah, I know. Yeah, he has some practical street experience, but he's an entertaining guy. One morning, I spent about 2 hours talking to him. He was trying to explain to me the Middle East, and your viewers, I'm sure, now realize that no one can explain the Middle East, so it wasn't going to work. But it was entertaining listening to him try to explain to me the Middle East. And I just sat there patiently letting him.
I saw Talev speak at the last Ron Paul Institute conference, and he reminds me, he has like a Socratic method. So he kind of reminds me of one of my law school professors who was like a Socratic method type of teacher that would, argue any single point, try to be as annoying as possible, and, those types.
Right. Just answer the question, guys, right? He's smarter.
Or he tries to argue every single point. Yeah, even if he doesn't agree with anything, any of the things that he wants to argue, he argues it anyway.
His disdain for his opponents is legendary, right? I mean, he really, when he doesn't like someone, you know it right away. There's no diplomacy there.
Okay, so in the remaining part of the interview, Dave, let's transition from the stock market and the global economy. Let's talk about how, like, the U.S., we had the November elections in Congress. We had the Brett Kavanaugh trial, which was crazy. I mean, basically Trump is like the reality television show president, the first one, and he has a war with the mainstream media, and it's basically like a three-ring circus, and I think it's probably only going to get worse as long as he's in the White House. So would you say now with, like, Congress, the House of Representatives going to Democrat, that there's going to be even more drama going forward?
I guess so, but since it seems so fake to me already, it's not clear to me that they don't sort of set the level already. So here's where I really saw it. So Clinton pardons Mark Rich years ago, and the Republicans chased him around and said, "Hey, pardon Mark Rich. This is really awful. This financier running around Europe," and Clinton pardoned him. And then one day I saw a news show where they talked about some of the other pardons. And one of them was some guy named Jesus or whatever. And he was pardoned for smuggling 800 kilos of cocaine. And right away I'm going, there's not many stories you could tell me that would make that sound anything but disgustingly filthy. And I can imagine maybe one where he's the nephew of an important dictator and we did it to, for some geopolitical reason. But the most logical reason is someone bribed him, right? Someone bribed Clinton. The troublesome thing is the Republicans didn't touch it. So they're really like shadow boxing each other. There's a lot of baloney. And what's weird about the Kavanaugh case is that it got so vile. But to them it's a big game. And to us, it's screwing up our lives. And I think they're underestimating how mad the average person is at the people inside the Beltway. So this year, my year in review, I wrote about how we need a wall, but we needed to go around the Beltway. And we keep all those guys in.
There's already an imaginary bubble.
they're electing wretched candidates like Ocasio-Cortez or whatever. They're electing. The fact that Bernie was in the running to be president is staggering. Now, he's a nice guy, I think, but some guy who's a devout socialist his whole life is not presidential material. But somehow people, I think they'd elect, a clown. Some would say they did, but I think they'd just to pick a different candidate. And I think that the political parties, they should be more afraid of this than maybe they are. And Pelosi and Schumer and those clowns and Lindsey Graham, they're all they all think that their position of power is indefinite. And I'm not sure, So did the French aristocracy in the 18th century.
Yeah, I see a lot of evidence of things getting more and more polarizing, and there's less evidence of what used to define America, how there was like polite disagreement, there was polite discourse, polite debate. People could have an intelligent conversation and disagree, and they wouldn't want to, murder each other or throw like a Molotov cocktail in their car or their house afterward. And I feel that things are escalating.
The Portland riots, for example, are stunning. The Paris riots are stunning. These are not supposed to be happening. I'm not convinced I even know why the two sides are fighting each other in Portland. They seem to be just fighting each other for no obvious reason. It's just they're mad. So it gets back to this idea that if you're pissed off enough, you'll just do stupid stuff. And these social movements, by definition, start small. You don't know how big they're going to get, but these could get pretty big before this is over. And, people thought Trump was like the tip of the spear. He was the apex of idiocy in terms of electing presidents. I'm not sure that's true. I think we might find a less appealing candidate in the future. But I'm too entertained by him.
Well, I think we're going to get more and more radical because the American people, I've lived in the Washington, D.C. metro area now for almost 20 years, and for a long time, basically as long as I can remember, people have been voting change candidates to come to D.C., and once they get to D.C., they don't vote for any change. So I think people are going to continue to escalate, and they're going to vote for even more radical candidates probably going forward on both sides of the aisle. And, there's no viable third party either, and that's another problem as well.
Oh, there won't be. So, for example, the Tea Party shows up, and before long, they're now called the Tea Party wing of the Republican Party. They got totally absorbed. So they won't let the Tea Party stand alone as an identifiable party. They're just a wing. They're like the moral majority or whatever. And so they got reabsorbed. And so and you saw the primaries, right? Anyone who watched the primaries realized that the primaries are not about democracy at all. There were states for which Trump won and Cruz didn't, and they gave all their votes to Cruz. And that's not democracy, right? That's a joke.
Well, Hillary Clinton won like 20 coin flips in a row for a tiebreaker against Bernie Sanders, and the odds of that were like 0.0001% or something, and so she got this was during the primary too.
I remember that. Yeah, they did a bunch of coin tosses. She won every one of them. Yeah. What is that?
As a scientist, you know the probability of that.
It's 2 to the nth power. I don't remember how many n was, but it was a highly improbable event. I think it was 1 in 16 that she'd win them all, and she won them all. And, and we also know now in retrospect that the whole Democratic machine was geared up to keep Bernie out of the White House. We also know the whole Republican machine was trying to keep Trump out. And Bernie also took a cash payment to get out. So that's why he has a couple houses, nice houses now. Well, he probably didn't take it to get out, but rather to shut up once they got him out. Just saying, look, Bernie, here's some money, shut up. It's like when they put the Enron guys in prison for committing fraud, and no banker went to jail. These guys didn't set up off-balance sheet accounts without the help of bankers. And so I'm convinced that Fastow and Schilling were told, look, you do the time. You're going to prison anyways. When you get out, there'll be an account in the Caymans for you. You got to do your time. You bring down the system, we'll bring you down. So don't do it.
Have you spoken to Helen Davis Chapman about the Bernie Madoff scandal?
No, but I do know that J.P. Morgan knew about Madoff for many, many years before he got outed. They knew about it from day one, if you speak to her. They knew he was running a Ponzi scheme. Yeah, they knew he was running a Ponzi scheme. What did they do? They charged him high fees.
Yep.
So someone explain to me why J.P. Morgan as a financial institution should exist after that. When Arthur Andersen went down, my brother, who's an accountant, was defending him, saying, they shouldn't have gone down. I said, Ned, if Arthur Andersen didn't go down, then no one would get the memo. So I want to see bankers go down. I want to see, and that's one of the reasons why I'd actually potentially support Warren. Although I think she's probably getting so mutated that she'd never bring the banks down. But if someone had the ability to bring the banks to their knees, I'd vote for that person because I think the banking system is hopelessly corrupted this way. Hopelessly consolidated, too. I think it's got to get fragmented, and it won't get fragmented without it being done so violently, in my opinion.
Yeah, you should. Helen Davis Cheatman was a Madoff fraud victim. She put a lot of money in there. She was a successful lawyer. And then right before Madoff got arrested, because she's such a good lawyer, he actually got her number from someone else and called her up, and he confessed to her. And he told her that the J.P. Morgan knew about the Ponzi scheme from day one and that they were his partner. So I don't know. I don't know if we can trust the credibility of Madoff, although he is a Ponzi scheme expert. But that's what Madoff told her, and I trust her because she really doesn't have any reason to lie because she lost most of her savings in the Madoff scam. But your point about the bankers not going to prison, I think that's a really, really one of the worst parts of the entire financial system. So it's part of the financial system. It shows there's not a fair system of justice, not good rule of law. When
that was actually the first time. That was the first time. So that was Obama's biggest mistake of them all. He by policy said no bankers are going to go to jail, and for the first time ever, because whenever we had a big crisis like that and criminal activity started showing up, we sent people to jail. And the public could say, well, they're a bunch of lying scum and cheaters, but we got a bunch of them. This house is clean. We can now move forward. And now there's people who still are talking about no bankers went to jail. They're still mad about it. And it means that they stitched up a putrid wound, and it's festering.
Did you see what that mid-level manager admitted? He didn't get sentenced yet, but he admitted his guilt about manipulating gold and silver markets, and he told him he learned how to do it from all of his bosses.
Yeah,
and that
it was pervasive. He said it was pervasive, and no one cares. But, everyone knows
this
now.
We care, but the people who, bring the criminal charges don't care.
Right. But, again, the problem is when the populace reaches a point where they say, the system is not worth it anymore, that's when it gets problematic, right? The Roman Empire had trouble when the advantage of being a Roman was not as good as the advantage of not being a Roman. And at some point you cross the Rubicon, not to stretch that metaphor too far, but at some point you cross the Rubicon and you basically reach a point where the populace says there's nothing like, there's a great Joe Rogan interview on this where you reach a point where the people say, I've got nothing. And someone says, well, let's tear the system down, and when we rebuild it, you'll get something. And the person will say, sure, that sounds great. And that's how you do it. When half the country says, I've got nothing, then what's their downside in shredding the system?
Yeah, eventually it gets to a point of there's too much crime, too much corruption, too much immorality, moral bankruptcy, too much inflation, too much taxes. I could go on and on down a list of all these things that people hate in society, and then just people say enough. I don't know if the U.S., if we're quite to that breaking point yet, but we're seeing it in Europe where it's escalating to those levels of protest. Probably another election cycle or two in the U.S., and we're getting to that point.
Yeah, I think Europe's creaking probably because of the immigration crisis. I'm going to guess that was the tipping point for them.
Decades of European socialism too, right? All very high taxes in Europe, and they have universal health care there, but from speaking with a good amount of Europeans that are not in the Scandinavian countries, they tell me that they get worse and worse health care for more and more taxes, that it's a higher price every year for health care, and they get less every year. So it's covering less.
Yeah, socialism doesn't work that well.
Yeah, and you know what? Alexandria Ocasio-Cortez and many Democrats want to bring that here to the U.S. So they're saying how successful.
Out about her for your readers. I'll send your readers to Wikipedia. Go to Wikipedia and look up AOC. That's her shorthand because no one knows how to say her name. AOC. Look at Alexandria Ocasio-Cortez in Wikipedia, because right now there's the meme going around, and I don't like her politics, but there's a meme going around that she's a complete and utter nitwit. And if you go to Wikipedia, you'll go, she's not a nitwit. So you watch her speeches, you go, she's green, she's naive, she's bold, she does know what she's doing. But she's not a nitwit, because if you go to her Wikipedia page, you find out she went to BU, she majored in something, minored in economics, she was an aide to Senator Kerry, she was second in some goddamn science competition, and you go, this isn't a nitwit. And I guess what bothers me is it's kind of Kavanaugh light, in the sense that they didn't debate whether Kavanaugh was right or wrong for the Supreme Court. They just hung drunken, reckless, moody rapist on him. And I don't want to see AOC, I don't want to see her go down because she's a nitwit, because she's not. Break her down on her politics. And just like Kavanaugh should have been his suitability for the Supreme Court. Not.
Well, I think AOC is being groomed for president about 12 years from now. So
now I've got a better
I know a lot
candidate.
of people don't want to hear that, but I think
they're missing the kid. Ithaca has a mayor who is a black young male. He must be 30 now, maybe 29. Very affable guy, very sharp, very quick-witted, very funny. And I thought they were starting to move him up into the national view. He was on Meet the Press, and they just loved him. They thought he was so cute. And I've asked him, I said, have you been approached by the national politicians yet? And he says, no, not a bit. And this guy, and he was homeless as a kid. So here, Cornell grad, former homeless, black guy. Oh, my God, what a great story. And if the Democrats miss out on this guy, then they're blowing it. This is the guy they should be going for, not AOC. But maybe he's too rational or something. I'm unimpressed by the left. I'm unimpressed by both. The Republicans, their team hasn't even gone out on the field. They're in the locker room getting drunk or something. I don't know. The Democrats are on the field, and they look pathetic. They're wearing their helmets backwards, and they just look so stupid to me. And
I don't like either political party at this point.
Yeah, I'd vote for now. It took me a long time to acclimate to him, but I'd vote for Rand Paul. At first, I thought he was kind of a translucent poser of his father, who I was a huge fan of. But I think he's grown up a lot. And so I'd vote for Rand Paul.
So, David, we're around an hour right now. As we wrap up the interview here, I know you're an expert at writing these reviews now, since you've been doing it for over a decade informally, but formally for a decade. Do you want to make any predictions for 2019, or you're just going to focus on reviewing the past year?
Well, if I had to make a couple of predictions, I do believe that the market corrections are real and minuscule. So I think that if they're real, it's the vibrating puddle in Jurassic Park. It's not the creature itself. And so if I'm right, then this time next year we'll be doing a podcast talking about the blood. And it'll take several years for it to play out. I never predict gold. I don't know what gold's going to do, but I have a lot of it. And I think the politics are going to get crazier. I think the idea that maybe the Democrats being in charge now will wreak havoc on Trump. On the other hand, I actually think that their goal is to either defeat him or absorb him. And I can make a case that they're absorbing him, right? If you look at things he does, it looks to me like they're getting him to compromise where they need compromises. So they'll raise holy hell and make him look bad. But he's not been as bad for the Democrats or for the Republicans or he hasn't been as bad for the system as everyone wants to pretend, right? The world still rotates on its axis. Where he's pulling out of Syria, supposedly. He gets us out of Syria. He gets a big check mark out of me. And it shows you the president's powerless.
Yeah, I think he's becoming a lame duck because a lot of the Republicans don't like him either. So when the Republicans had the slight majorities in both houses in Congress, it didn't really accomplish a whole bunch. He didn't get a bunch of stuff done. But basically, he's setting a dangerous precedent with this national emergency if he starts doing executive orders because, things escalate. I agree with you. I think things are going to escalate. We're going to get more radicals from maybe both parties, or we're going to have radicals leave both parties and start new parties. And as these radicals gain power in our political structure, they're going to, if Trump gets this executive order power to build the wall and all this other stuff with the military and completely bypass Congress, the next president or two after that, it's going to be scary to think about what they could do.
Obama did stuff like that too. This is not that new. Here's the deal. The wall looks like a colossal waste of money on our scales, but on the federal scales, it's not. Here's a guy who got elected to build a wall. He got elected to build that wall. And somehow the other politicians are saying, we're not going to let him build that wall, period. And it's like, well, he got elected to do that one. Right? That is the metaphor of his presidency, that wall. And here's what I'll tell you. I think there's all sorts of things with our immigration policy need to be straightened out. We got to solve the DACA problem. We got to solve the immigration problem. We need Mexican workers coming over. We need people who've been here for 25 years to be able to stay. There's all sorts of things to be solved. But I think it's moronic to say you shouldn't even try to control your own borders. If someone's listening to this, if you think we shouldn't control our own borders, you've lost every ounce of respect, because we're a sovereign state. You control your borders. What you do with the control is a separate issue. So I think if a wall controls our borders, build the wall. He got elected, build the wall. I don't care. Hire some guys. It's fake stimulus. Hire some guys, build the wall. I think it'll slow down some stuff. I don't think it's necessarily a great solution. But that's what he got elected to do. Let him do it. But no, they're not going to let him do it because he's Trump and they don't want to give him. So if he called it a mall, they'd let him do it.
Well, it's not even a wall anymore. He's relabeled it a steel slate. I haven't followed up with all the name changes and stuff. But I mean, the military industrial.
They should give him $5 billion to build a banana. Right? I mean,
it's ridiculous, though, how the military-industrial complex, with the U.S. military, cares more about defending borders in other countries, though. I mean, one of the primary purposes, at least initially, for a military is to protect your own borders. That's just my opinion.
Absolutely. Well, so you got the whole deep state thing.
But that's if you're using your military just for defense, right? You're not going around attacking different countries and doing regime changes and all that stuff.
But we've been doing that for a century. There's a great book called Overthrow. It talks about 13 examples of which we overthrew democratically elected leaders. We're not big fans of democracy. We pretend to be big fans. We are not in any way, shape, or form, and it only takes a little bit of well, first of all, it takes a little bit of a knowledge of history to know this. But the question is why, and the answer is because, okay, so you got some person running some country down in South America that no one could find on a map. And we want to control them. Do you want to control the populace, or do you want to control one guy with a cigar sticking out of his mouth? And the answer is you want to control one guy. So our perfect leader is a Shah. You say, here, we will make your world great as long as you do what we tell you. We don't control democracies. If we did, Trump wouldn't be elected. So we like dictators because we can control them. If they go rogue on us, we take them out, we put in a new one, and it's just really garish gunboat diplomacy, and it's maybe how the world's always worked. But we're not the super good guys that we kind of always thought we were and wanted to be. If you read about the history of World War II in detail, you find, the Lend-Lease program, we did all sorts of political baloney to put the British over a barrel to give them arms. We didn't just get the arms to them. We ensured that when the war was over, they would not be a superpower based on the deals we cut to lend them the arms in World War II.
Yeah, and FDR knew about Pearl Harbor months in advance. They had military intelligence, so they let the Japanese bomb Pearl Harbor. Yeah, I'm
positive they did because they didn't even have someone with binoculars looking out to the west when we had our throat on the Japanese and the drums of war were noisy as hell, and the noise in the communication channels was deafening. Yet we didn't have a guy standing in a guard tower with a radio saying, hey, there's planes coming. Our westernmost naval base. What kind of idiocy is that? F Troop put guys in the guard towers.
Well, politicians like war, and a lot of corporations now, military-industrial complex likes war, so it's a big business.
Well, so one of my epiphanies this year that I talked about is that the Middle East is not about oil, it's about war.
Initially it might have been about oil. I'm not sure anymore, though. You may be right.
Now it's about feeding the industrial military complex. As soon as the Berlin Wall came down, we had to find something else to spend trillions of dollars on. Oh, lo and behold, we get terrorists from the Middle East. What a shock. Russia's out of the game. Now we get terrorists. Middle East out of the game. Watch out. Here we go, China. That one's going to get us in trouble. We can bomb the Middle East and get away with it. We can't deal with China and get away with it. If we think we can turn a Chinese conflict into a plus, we're so delusional. That will be an awful, awful period in history.
Yeah, there was that crazy neocon guy, Bill Kristol, a couple months ago on Twitter saying the U.S. needs their first strike to attack China, and I started calling him out on Twitter. May have blocked me.
He's a scary guy. He's one of the classic neocons. He's right at the heart of the neocon world. And I'm just getting really jaded and grumpy in my old age. But I call these things out. The social media allows you to do this. I call them out. I called out the fake nerve gas poisoning, and I called Theresa May out. And it actually, I think, had an effect because, organic chemist at Cornell says that the Novichucks are trivial to make. That put a little pressure on them because no one else was saying that. And I think it caused the Porton Down guys to actually not be willing to say it was Russia.
Did you get a nasty call or an email threatening you when you came out with the truth?
Well, I got my Twitter feed filled up with what looked like spooks. And they looked like they were trying to scare me.
Oh, like calling you un-American or something for questioning it?
Oh no, it's deeper than that. It was a show of force. It was showing maps of my connectivity to Russian bots and stuff like that. Like they can monitor everything. And I said, you know why I speak out? Because douchebags like you, who scare the hell out of me, I'm going to keep speaking out. And I got into it with some guy who said he was a chemical weapons. He is tweeting about chemical weapons for humanitarian sake. And his wallpaper was a jet. I said, do you deliver your humanitarian aid with that jet? And so he started telling me that I was full of baloney, and I just nuked his ass. He was easy to beat because he is some analytical chemist in the defense lab, which means he's basically a GC monkey. A chemist will know what that means. And he was trying to tell me I didn't know anything, and I assured him that I could run circles around any chemist in the defense labs.
Well, I think there is a war on truth, though. So when someone who's an expert in their field calls out someone who's maybe a billionaire, maybe someone who made a tunnel, like a crappy sewer tunnel, and made a YouTube video saying it's not a good tunnel.
Yeah, exactly. Well, social media's changed the rhythm, hasn't it?
Exactly. I mean, the stuff that's coming out about Tesla and exposing the fraud is pretty nuts, but I can't talk about Tesla too much because I'm going to get all these nasty comments below this interview saying, like, how dare you say anything bad about Tesla and all this stuff.
Well, they'll get over it once it goes insolvent.
Well, I just blocked those people, but we'll see. If there's enough Democrats in Congress, he'll get a bailout. So.
Exactly, but it still won't change the facts. You can change what you say, but you can't change the facts, right? And it is what it is. And so at some point he'll be shown to be a charlatan. He's a smart guy, but he's P.T. Barnum, right? He makes his cars intense. P.T. Barnum made his.
Well, I think we're getting towards that end game there. Mentioned in like Atlas Shrugged, where everything is just corrupt and a lot of the business people are in bed with the government and, they don't actually care about creating value and doing a good job for their customers and earning repeat business the right way. They don't care about that anymore.
Yeah, I think that's probably true. Too many vested interests.
Well, David, I always enjoy our conversation. So your 2018 year in review is available on Chris Martinson's website, Peak Prosperity, at peakprosperity.com/blog, and then just look under 2018 year in review. So for listeners want to follow your work more, how do they do so?
Well, if someone wants to email, they can. I got a pile of emails this year because I said that. You can also
just
follow
your Twitter
me on
then.
Twitter at David B. Collum, Collum, and
And you'll see it's a bunch of random crap. It's anywhere from economics to politics to cat videos. And so.
You have eclectic taste then, just like most of us on the internet.
Right.
Well, I want to thank you for your time today, and I think 2019 is going to be another interesting year, just like 2018 was, although I'm not sure how much more drama I can handle at this point.
Me too.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street for Main Street YouTube channel if you have not already done so. Thanks for helping Wall Street for Main Street pass the 20,000 YouTube channel subscriber milestone despite YouTube censorship. Hopefully, we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down this channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street for Main Street email list that's on the wallstreetformainstreet.com website and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to wallstreetformainstreet.com, that's wallstreetformainst.com website, where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing my loyal listeners with some of the best information, analysis, and financial education available out there, free or paid, as I work to grow the podcast and also get my educational technology company funded.